Welcome to Fundoo Money, your 24/7 buddy on all matters related to personal finance. Now, in this particular web series, we are dealing with all the major things that an investor needs to take into account while investing in stocks. Now, in this particular segment, we are going to be looking at a particular ratio. Yeah, that's right. The word is ratio, financial ratio, which actually comes from one of the financial statements in trying to figure out the health or the investability, should I say investment worthiness of a particular stock. That's coming up shortly. Gross profit margin. Now, what on earth is that? Now, that is something that you keep hearing in all stock market discourse. A company's results is out, a stock has gone up, etc., or gone down, and people talk about gross profit margin. What on earth is a gross profit margin? How should a person who's invested, an investor who has invested in a stock, be bothered about it? How should he be looking at it? He or she should be looking at it. To help us understand that and give us a very simple explanation, we have one and only Mohit Santanan, a stock market expert. Hi, Mohit.
Hi, Udayan.
Mohit, gross profit margin. Things can't get more complex than that.
No, it's very simple.
What is it?
I buy stocks
Yeah.
because a company makes profit. I wouldn't buy a stock if a company was making a loss, right? So the gross profit margin tells me, very simply, how successful is a company in making a profit, right? So for every, would you rather own stocks of a company which make 2 rupees for every 100 rupees that they charge the consumer, or a company which makes 80 rupees? It's actually very simple. I buy stocks because I want a share of the profits of the company. If a company makes more profits, I'm more interested in buying stocks of that company. The gross profit margin is telling me that for every 100 rupees of goods that a company sells, what is the gross profit that it makes? That's before charging all the other expenses that a company incurs. So the first way of looking at it, and the most important to my point of view, is what I call pricing power. Do consumers value the product of a company substantially enough to allow the company to make a gross profit margin? If the profit margin is growing sequentially over time, over a 5, 7, 10, 15-year period, that to my mind is the clearest signal that the company is in a strong place. The consumers like its product. It's able to create more elbow room with respect to its other competitors in the space. And also from an operational or financial point of view, it means that there's more money available for the company to grow, to pay all its financial charges. So I look at gross profit margin very keenly, both from a static point of view, which is how does it compare to profit margins of other players in the industry, and from a dynamic or time sequence point of view, how has it changed over time? If a company's gross profit margins are declining, that means one of two things. Either that it's losing pricing power with respect to the consumer or its competitors, or that particular market is now not a dynamic expanding market. So to me, this is critical.
That's awesome. And one little ratio, one little indicator indicating so much. It's almost reminding me of some of these lab tests that you do.
How high is your cholesterol?
Oh yes, those are the figures that nobody wants to see, but have to deal with it. But yeah, gross profit margin actually is a figure a stock market investor has to deal with, as Mohit has pointed out in a very wonderful way. If there are other things that a gross profit margin you think tells us, or there's another way of looking at things, what are you waiting for? Go right ahead at the comment section and put in your comments. If you have suggestions, please feel free to make those suggestions. If you've liked this video, don't hold yourself back. Click on the like button, and of course we would love to have you subscribe to our channel. Last but not the least, stay connected with us on all leading social media platforms.